Okay, today we're going to talk about trading Tesla after earnings. Fresh news play day one, day two. If you're interested in learning how to trade Tesla both on the long side and the short side, then stick around. Hi, I'm Steve Spencer. I'm a partner at SMB Capital, a proprietary trading firm in New York City where we trade stocks, futures, and options. So today's video on trading Tesla, we decided to film it inside a Tesla Model X. So as many of you know, Tesla is one of the more volatile stocks in the market. When it's in play, when it has a fresh news catalyst, it provides opportunities, generally both on the long and the short side. So we're going to take a look at how Tesla traded the day following the earnings announcement, and then the second day, how it set up. I made several trades on both days, and I'm going to walk you through my thought process for those setups and those trades. So the first thing we want to do is take a look at the notes from day one under fresh news. I both have support and resistance levels and a couple of little notes. So the support levels 165, 162, and 160. Resistance 168, 170, 173.5 by 174. If we take a look at the first chart here, what we can see is this is how it's set up in the after hours. You can see it started to sell off when the earnings release came out. They had a conference call. It was trading in the mid 170s. That conference call did not go well, and it moved lower to below $170 a share. And so you can see the sheet I've marked up with S1, S2, R1, and R2. My mindset coming into day one is that Tesla was around 185 going into the close on the day of the earnings release. It did sell off a few dollars right into the close. And then when the release happened, it dropped about $5. By the time the market opened the next morning, it was already trading down in the 165 area. So my thought process was this: the earnings call did not go well. Perhaps it has a chance at trending down for the day, but when the market opens, quite often on a stock like Tesla, where it's already dropped a full ATR from the conference call to the next morning's open, there will be dip buyers. And so the way to look at that is, let's zoom in on the next chart. So as we're looking at this chart here, I've marked it up with three potential action areas. As I just mentioned, when the market opens, it's right at S1. You can see it's already bounced a little bit into the market open from below S1. And that action point is really just strictly a momentum trade. We're jumping in right on the open, looking for those dip buyers. And then my expectation is it may move up to R1, R2 area, but unless it's holding above that area for more than a few minutes, it most likely will drop right back down where another trade will set up. And so action point number two is between R1 and R2, and that is where I took a short trade. And what you can see is on this 5-minute chart right here, what we're looking at is I had offers up. Because stocks move so quickly in that first 10, 15 minutes, you have to sometimes anticipate spots where you want to get long or short and have offers up. So I had some offers up, a few offers, one below 169, a few offers above 169, a few offers into 170. Most of those offers got taken on those little spikes that you can see on the third and fourth bars. And what I did there was covered when it came back down, and I noticed that there were buyers at the 167 level. The third action point was once I noticed that there were sellers at 168 and buyers at 167, was okay. First move was up, there were dip buyers. It failed to hold above R1, and at that point, the burden is on the buyers to show that it can get above R1 and hold for an uptrend. Otherwise, I'm thinking it can come down to the morning low, and if it gets below the morning low, perhaps it will trend down for the entire day. So action point number three is, over the course of the next hour, we see sellers continue to come in around 168.5, 168, stepping lower and lower. Buyers not stepping up. That's why you can see I've drawn that blue line almost like a right angled triangle. And the sellers are stepping down. The buyers are still at the 167 level. Eventually, right at 11 o'clock, the prices drop below 167 to 166. That's action point number three. And that's what we call a potential downtrend trade, where you're looking to trade it down to the morning low And if it starts to hold below the morning low, then you have a trend trade coming into potentially S2 and then S3. So that was day one. Pretty good setups, both on the long, right on the open, the short trade into resistance, and then the more slower setting up trade for those who are more deliberate, a little bit less experienced. You can watch that unfold over the course of an hour. When you get a clean break of the support that's set up for between 10 and 11, you then have a short entry. So now let's go to day two. Second day play. So we have 160, 162, 163 support, 164, 165, 167 resistance. And then the notes are simply the morning pop, then sold the rest of the day. So we know that it was weak on day one. And so we want to keep that in mind on day two when we're looking to make a play. Here is the support and resistance that I've outlined for you on day two. You can see on the left side of the chart is the day one price action, where eventually it went down to almost S3 and had a little bit of a bounce into the close. It's gapping up a little bit on day two. I've labeled R2 and S2 for you. The way that my thought process coming into day two was the stock was down from 185 to almost 160 on the first day. Perhaps there'll be some more dip buyers, institutions looking to buy it here down in the low 160s. Maybe it could get as high on day two, as high as perhaps the high 160s. What I said in the morning meeting was, it bottomed into S3 into 160 on day one. Perhaps if it does roll over on the open, maybe it tests the day one low, or maybe we get a little bit of a higher low. And from that, we can look to see if it has a bounce to the pre-market high or something like that. So that was my thought process coming in. You can see I've labeled S2 and R2 on this chart. If we zoom in where I've marked it up, just like I did on the first day with action points, the first action point for me was right on the open. Again, I wanted to take a short trade on the open at R1, R2 area, just like on day one, thinking perhaps it will roll over to that 160 to 162 area. 162 on day two, as we saw in the morning notes, was, I believe, S2 on the sheet. So action area one, I shorted it right on the open. I had offers up and very quickly came down to S2. I noticed there were some buyers at S2. So I put in some bids. It popped immediately about $1. Then I put in some more bids and actually tweeted it out. You can take a look if I want to show you my tweet. It looks like it was starting to do a bottoming process. For my confirmation, what I would like to see is it starting to hold above 162.5. And that is action area number two. Eventually, it did hold above 162.5 and went all the way up to 164.5. And at that point, I'm like, okay, we have our range for the day. We have the morning high where I shorted. We have the morning support around S2. And then eventually what I'm looking for is some type of consolidation and a break in either direction. We got that between 11 and 12 o'clock. I've circled that as action area number three. I'm really, maybe I'm leaning a little bit more towards the long side here, as it had a pretty nice bounce into the 164 to 165 area. On the attempted rollover, it very quickly came back to 164, but I'm prepared to play that break in either direction. In this case, it actually at around 11:45, it broke to the upside and started to consolidate above the area that I have circled there. And so at that point, action point number three is traded on the long side to the morning high. And you could sell half of your position there, 75% of your position there, and trail a stop below 164 and see if perhaps maybe it makes it all the way up to the 167, 168. As I'm filming this video, I think as high as it's gotten is maybe the high 165, so I'm not really sure what it does into the close this day, but that's the thought process. Remember, this is trading. I'm a long-term Tesla shareholder. Couldn't care less about the quarterly news. I love buying it on the dip for the longer term. But as traders, we have to be thinking about what is the price action telling us today? What is the context of the setup? Can we find good areas to be long? Can we find good areas to be short? I hope this video was helpful.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets, and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.